Hi there, this is Alvin from Dr. Wealth. The recent banking crisis has got some investors interested to buy some of the bank stocks because some people see crisis as an opportunity. So is it true? Of course it can be true because some of the old timers remember that Citigroup was trading at around $1 during the great financial crisis in 2009, and eventually the share price recovered, and if you hold until today after 14 years you'll be up about 400%. So some investors were thinking, can this feat be repeated in this banking crisis? And some of them started to look at the bank stocks. But I want to warn you that there are some risks that you do need to consider. So the very first risk that we need to know about this banking crisis is that there can be more bank failures. And that means that when the bank goes down, the shareholders are going to receive nothing. But then people will say that, but a lot of banks are systemically important, like Credit Suisse, the government will never allow it to fail. And that's why they asked UBS to buy over Credit Suisse. But you have to understand that it is the depositors that will get back their money. It is the depositors that the government will want to protect. It is not the shareholders, because the shareholders of Credit Suisse lost most of their investment. But sadly to say, that was what I observed based on the Standard Chartered customers trade for last week. Credit Suisse was one of the more popular trades, ranked top 10 in the New York Stock Exchange, right? This is just limited to the Standard Chartered customers. And you can see that 89% of them bought it last week, okay, as compared to 11% of them sold. But unfortunately, as we know, Credit Suisse, the share price has gone down more than 60% because the offer from UBS came 60% lower than the closing price on Friday. So within just a few days or a week, Credit Suisse shareholder lost more than half of their position. So this is something that you need to know and you have to avoid, because having a bank safe doesn't mean that the shareholders will get back money, right? In fact, you can see that they'll get back pennies for the dollars. And the second risk that you need to take note of is that volatility risk, because during this time the bank share price will gyrate very violently, right? It can go up double digit one day, it can go down double digit one day. So that volatility means that you might not be able to time it properly. And a lot of people may think that after the stock drops, say 20-30% or even 50%, the next day it should go up, right? Because it cannot just keep going down. But unfortunately, that's not true, because a stock that has gone down 50% can still go down another 50% without going to zero. And if you don't get the timing right, you might keep losing money day by day. So a case in point would be the First Republic Bank, which is also near that kind of failure mode, failure situation. So investors need to take heed, right? So you can see that since the banking crisis started 9th March, the First Republic Bank has gone down 17%, then 15% the next day, and 62% the third day, right? You can see that it can go down double-digit percentage for over a few days. But then you start to see that, oh, after that it rebounded 27% up, then down 21%, then up another 10%. So maybe investors start to see, oh, there's a pattern. If you go down one day, the next day will go up, go down one day, go up. So when you go down, I'll buy, and then the next day I'll sell. But unfortunately, if you look at 17th March, it went down 33%, and on 20th March, it will go down another 47%. So if you think that after a stock dropped 33%, you cannot drop any further, you want to buy and want to sell and rebound the next day, you can see that it can go down even more. So that is the volatility risk that I'm talking about. It's going to move a lot, and if you get the timing wrong, you're going to lose a lot of money as well. But does that mean that there's really no opportunities to buy bank stocks during this period? The answer is no. There can be opportunities, but you need to do some work. You need to do some research to really figure out what are the more resilient banks that can survive this crisis. Because if they go down, means that your money is gone. Remember the number one risk. So how do we understand this, right? How do we find a more resilient bank? So one way is to look at the unrealized losses. It should be minimal as much as possible. So what is this? Because we know that a lot of the banks are holding the bonds or treasuries, and because of interest rate hikes, interest rate goes up, bond price moves down. They have this inverse relationship. So when these bond prices move down, the banks will have to hold on to a lot of unrealized losses. Okay, so as long as there's no bank run, they will hold these losses to maturity, and eventually the losses will disappear because they will get back their principal after the bond matures. So all is good, right? Provided there is no bank run. But of course, the safer way is to figure out which bank have very minimal unrealized losses, such that means their bond exposure isn't that high. They have more multiple sources of liquidity. these are the banks that are unlikely to have bank runs. Okay, so from that figure, you can see that JPM, which is the largest bank in US, JP Morgan, I would say Citigroup, as well as M&T Bank, MTB, they seem to have very minimal unrealized losses. So I would think that these are the more resilient banks to begin with. Of course, please do your own due diligence. And another way is to look at Warren Buffett, right? He is still an investing legend, and he does like investing in banks. He does have a few bank stocks in his portfolio. So the largest is Bank of America. Okay, even though you can see that from the previous chart that I showed you, Bank of America actually have quite a substantial unrealized losses. But the other good thing about it is that when Silicon Valley Bank went down, Bank of America actually received $15 billion of deposits, okay, from Silicon Valley Bank, and it became a beneficiary of it. So as long as depositors still see Bank of America as a good bank and they are not going to withdraw the money, there will be no bank run, means that Bank of America is safe. Okay, so even though those unrealized losses eventually will disappear, as long as they survive long enough to get back their principal. Okay, so that is for Bank of America. And of course, I would also say that because Buffett have it, he's one of the largest shareholders of Bank of America, he will never want to let it go down, because you only get pennies back on the dollar, if any. So with that, maybe he can flex his influence and make sure that Bank of America continue to remain strong. Okay, so that can have some assurance for some investors. And another bank stock will be Citigroup, which Berkshire Hathaway just bought it last year. It has 0.7% exposure in the entire portfolio, a lot smaller compared to Bank of America. But you can now get at a price that's lower than what Berkshire bought last year. It bought an average of about $45 per share. At the time of recording, Citigroup is at 44, so slightly cheaper. You can get it lower than Warren Buffett in this case. So these are some ways, right, that you can get some ideas what are the banks, which are the banks are more resilient, and of course do more research, do more study on them to make sure that they can really survive this crisis. So in summary, there can be opportunities to buy banks during this banking crisis, definitely, right, because the prices are beaten down. But research need to be done. You need to have careful consideration, understand the risks. I mentioned two key risks that you should take into consideration. The very first one is bank failure risk. You have to make sure the banks don't fail. If they fail, shareholders are not going to get much back. And second is the volatility risk that I talked about. The share price is going to gyrate a lot, right? Up, down, up, down, up, down. They may not be suitable for short-term trades because your timing need to be very immaculate unless you can do that confidently. Otherwise, I suggest you don't try. So my suggestion is simple, right? Look out for the more resilient banks that can survive this crisis. Then your chances of making money will be higher. So I wish you all the best. Like this video, subscribe to this channel so that you'll not miss another video like this again. I'll see you in the next one. Goodbye.